Chinese investment in Australia has plunged by a whopping 61% in 2020. Just as we've gotten through the worst of the pandemic, there may be another huge risk for the Australian economy in 2021, and that is losing a lot of investment from China, which was the biggest trade partner that got us out of the GFC in 2008 and 2009. Not to mention, the Chinese have been some of the biggest property purchasers, which has really helped keep property prices going for the past 10 years. So if there is all of a sudden a flight of capital from China in property, or the Chinese government tells their investors in Australia to sell off their property, we may see a softening in house prices here in Australia. And if this video brings you value, please tap that like and subscribe button for the holy YouTube algorithm. It really helps out the channel a lot. And comment your thoughts below. Do you think this is a good thing that China is pulling investment out of Australia, and hopefully now Australia can get back some of its assets and Australia can invest in Australia? Or do you think we still need this strong international investment to keep our economy going? Okay, so it says here, Chinese investment in Australia has collapsed, falling 61% in 2020, according to new data from researchers at Australian National University. The university's Chinese investment in Australia database recorded just more than 1 billion of investment in Australia in 2020, down from 2.6 billion in 2019 and well short of the peak of 16.5 billion in 2016. The drop follows a 47% decrease in 2019. Wow, so you have to understand this is a big deal. The investment of China has gone from 16.5 billion in 2016 to just 1 billion. This is going to definitely have an effect on the Australian economy and on the Australian housing market. And can you remember what happened in 2016 when the investment hit its peak of 16.5 billion from China? What was happening then? That's right, it was when the Australian housing market was booming. And yes, we are having a boom in the housing market right now, but that is driven by ultra low interest rates and easy lending standards being eased this month in March. So what could possibly happen is, if the trade tensions escalate with China, China could call up its investors, or maybe even possibly force its investors that have assets in China to sell off their assets. And this could definitely put a dampening on property prices here in Australia if this scenario did happen. And it would most likely have an effect in the inner city CBD apartment market, because most of these apartments are owned by foreign investors. So Australia has had strained economic relations with China since it's called for the World Health Organization to gain weapons inspector style powers in April 2020, was promptly followed by threats of a consumer boycott in China. So, there's been calls for there to be inquiry into how the pandemic began in China. There's been some conspiracy theories. Who knows really how it happened? There's only speculation here. But it definitely is suspicious with how strong China has pushed back, and with the amount of threats that they're made to Australia, and really how they've tried to bully Australia by saying that, you put an inquiry here, we're going to crash your economy. So they're definitely looking a bit suspicious there. So Australian exports, including coal, wine and beef, has since suffered, although declines in some sectors have been offset by booming iron ore prices and volumes. So that's right, coal has really been affected big, and the wine and beef industry has really been affected badly. And I feel for those farmers out there and for those wine producers, because no fault of their own, they're just getting caught up in a political trade war here. Their businesses have really suffered, and let's see if that affects jobs in those industries later on this year. But luckily, what's really been helping the Australian economy is obviously booming house prices, and also more importantly, booming iron prices. And that's why the Australian dollar has appreciated so strongly as well. But according to Dr. Shuro Armstrong, the East Asian Bureau of Economic Research Director, decline in Chinese investment is most likely due to Australia's changed foreign investment settings during the pandemic. In March, Australia lowered the threshold for foreign investment reviews to just $0, ensuring every deal will be checked to prevent a fast sale of distressed assets to foreign investors. A new national security test also allows the Treasurer to retrospectively cancel deals. And that's something we definitely don't want here in Australia, to sell off all our resources and sell off our assets to foreigners in a fire sale. So foreign capital goes where returns are high, Armstrong told The Guardian. Part of the calculation is risk-adjusted returns, including what investors see as the best bet in returns of certainty. The investment environment in Australia looks less certain given the extra scrutiny on foreign investment during the pandemic and the national security test. So also what we did see with China is there was a lot of money going around that maybe was dirty money, and there was some dodgy companies set up. So now the Foreign Australian Investment Commission and Board is definitely looking a lot more into these foreign investment deals and purchases and assets to make sure that there's not any money laundering or anything going on. And he's also saying here, Australia just isn't looking attractive for foreign investments. So he's saying here that the returns in Australia are going to be less compared with other countries. So what everyone's saying in Australia, that our economy is recovering, maybe foreign investors are saying the recovery isn't going to be as strong as everyone expected. Armstrong said in a downturn, countries usually open up to more foreign capital to help distressed assets refinance their debt, but Australia had gone in the opposite direction to prevent assets being snapped up. So this is a very interesting move, because even this is something I thought that would happen, that, in the case of a downturn or the economy weakening, that the Australian would just open up its borders and, let immigration come on in, or let foreigners buy up investments or assets to prevent a crash. But, the Australian government, hats off to them, actually haven't done that so far. But who knows, I'm sure once the borders do open that they will flood immigration in, because that's something our economy definitely relies on, is immigration, foreign investment, and it's definitely going to help property prices, more specifically the apartments and the student market in the inner CBDs when an immigration opens back up. That may sound sensible, but it may not be if it means a lot of them just go under instead. According to database, just 20 new projects attract Chinese investment, well down from a peak of 111 in 2016. In 2020, Chinese investment was limited to just 3 sectors. And can you guess what sectors they were limited to? Real estate, mining, and manufacturing. And so real estate was the biggest with $461 million invested, mining $414 million, and manufacturing just $153 million. And we all know what the Australian economy relies on is building houses and digging holes, something that we've been doing for thousands of years, but we're really not innovating enough. I do think we need more innovation and really prop up some other sectors just besides making housing more unaffordable, because I think that's an unproductive thing to do, because if house prices just go up and people just spend all their money on their mortgage repayments, they're going to have less money to spend in the real economy. In 2020, some 86% of Chinese investment in Australia originated from Chinese companies already established within Australia, meaning purchases were made via Australian subsidiaries rather than by foreign firms directly. So this shows that maybe there is actually a little bit more Chinese investment that's going on than meets the eye, but they are set up via Australian subsidiaries or Australian companies than directly buying from China. In 2020, foreign direct investment fell globally by 42%. So that's a big reduction. And, we keep saying, there's this V-shaped recovery, everything's booming again. But I think it's going to take some time for the economy to really feel the effects of what happened last year. Now that all the stimulus is going to be withdrawn in March, it's going to be interesting to see if we start to see some cracks in the economy, or we start to see some of the aftermath of this pandemic, because all the stimulus and all the government handouts have kind of masked that. According to the United Nations, meaning the fall in Chinese investment in Australia outstripped the global average. So the global average was 42%, and China reduced their investment by 61%. So that's definitely showing that they're reducing it well above the trend. And the UN reports that total foreign investment to Australia fell by 46%, whereas foreign investment to Japan, China, India, and some developed countries such as Sweden and Spain rose. Investment to the United States and the United Kingdom plummeted. And I think that's because that's where the pandemic really hit the worst, was China and the United Kingdom in the most developed countries. So they're seeing a huge reduction in investment, and I can't blame them. Things definitely aren't looking good for the United States and the UK. So Chinese investment in Australia has been particularly sensitive since the Northern Territory government surprise decision to sell the port of Darwin in 2016. That's something we definitely don't want to sell off all these precious pieces of land of our country, all our assets. We want to own assets like what China is doing. They're definitely going to become a global superpower the way they're going. They're due to become one of the biggest economies, or the biggest economy, by 2028 or 2030. And that's because they're purchasing assets where the West just seems to be selling off assets to fuel these government handouts to things that's not really being productive for the economy. The Federal Labor Party has suggested using New Deal cancellation powers to unwind. So guys, this is just another thing I'm monitoring that's going to affect the Australian economy, along with the fiscal cliff in March. Now, to an extent of how much it's going to affect the Australian economy, it's hard to tell. No one can really predict the market and the economy to exact. Even all these major banks and economists can't predict it. So what can a pleb like me on YouTube predict? But it's something that I don't see coming up in the media that much. And it's definitely going to have an awakening effect on the economy, with all this stimulus being taken away and with all this investment by China being taken away. So it's something I'm definitely going to watch, and something that you should be aware of that we may not notice until late this year or early next year. So guys, what do you think about this? Do you think this is a good thing that there's less investment from China into Australia? Or do you think they're a necessary evil that we need to keep the Australian economy going? Let me know down below. And for all my loyal viewers and subscribers still watching, you're awesome. And if you haven't already, please tap that like and subscribe button. I'll keep you up to date on the latest Australian economic news. And of course, I'll see you all in the next video.